In this video, I'm going to go over some creative financing strategies for real estate investing. Some of these strategies I personally have implemented when buying a multifamily building. These strategies will help you put down less money down on a property. These strategies will help you maybe come up with some renovation money. The most important thing you need to understand when it comes to creative financing is you're just applying more leverage to the property, and you don't want to be in a situation where you're over leveraged. So the first one, when you're looking at a property and maybe you're in a situation where you might not qualify for bank financing, you can always try to negotiate a vendor take back. So essentially what a vendor take back is seller financing. The short form for a vendor take back would be VTB. So you can get seller financing in first position, second position, all the way up to third position. So basically what that means is, instead of going to a bank to get funding, if the seller doesn't have a mortgage on the property, what you could do is ask the seller if they would hold a first position mortgage on the property. And it would be very similar to a bank process, but the seller would technically become the bank. When you pursue this route, you also negotiate terms for that financing. So again, when it comes to seller financing or a vendor take back, it can be in first position, second position, or third position. Note that third position is very risky. Most sellers probably won't do that. Even second position is risky. And to give you an example of a second position vendor take back would be, you would do a second position vendor take back just to put down less of a down payment. So you still would need either a bank to come into first position, but then you would ask the seller, for example, if you're looking for a $100,000 mortgage, you would go to a bank to give you $80,000. And then you would go to the seller and be like, can you hold another $10,000 in second position on closing? And then you would come up with your $10,000 to complete the full transaction. Keep in mind that is riskier, just because who's ever funding your first position needs to be notified, because if they're not notified, that technically could be considered mortgage fraud. But when it comes to creative financing, you could structure it this way. So for the second option, if this vendor take back option isn't available, you could also do private lending, right? When it comes to private lending is anything besides banks, right? So there's other institutions that will give you funding. There are individuals, companies, you could literally go up to family and friends, right? Anyone technically with money, right? They can become a lender. So it's very similar to the VTB, vendor take back. If you find someone who has the money to become a lender, right? They can go into first position, second position, or third position. Usually private lenders compared to banks are a little bit more lenient to work with, but again, they sometimes have higher fees, higher interest rates, but if the deal makes sense, it still could be something that you consider. The last option would be agreement for sale. So agreement for sale is basically very similar to a vendor take back, but there is no transfer. So what's happening is it's basically an agreement that you are going to be closing on a certain date, and you put down a deposit and you work out all your terms, but you don't transfer the property. So why this might be something that you could consider is because if you're trying to renovate a property, you could close, right, with an agreement for sale, control the property, do all the renovations, stabilize it, and then refinance into another mortgage, right? Refinance with bank financing. Agreement for sale gives you access to the property without needing to get like a bank or a lender involved. Again, this is something you'd have to negotiate. This would also be something that the owner of the property would have to be okay with, and you'd have to negotiate terms. To have the seller be comfortable with something like this, you obviously would want to show a track record. You'd obviously need to show that, you know, financials, maybe credit score, right? You would need to make the seller comfortable that you know what you're doing and that you can actually complete this project and not be in a situation where you're not going to be able to refinance out The agreement for sale is also a little bit riskier just because, for example, if that contract is only for about 1 year and you put down $100,000, $200,000, right, for that deposit, you gotta also understand that if you don't close or if you don't refinance and pay the seller out and complete the transaction, that contract technically is terminated, right? So, you'd lose your money in that event, right? So you don't really have a lot of security that, yes, that contract is registered onto the property, but again, if you don't fulfill the contract, if you don't fulfill the agreement, it is void. That is something that you need to consider. So like I said at the beginning, getting creative on properties is a great strategy. You also always have to have an exit plan, right? If you do not have an exit plan, I do not recommend over leveraging a property or leveraging where you're now in a situation where you don't have enough funds to renovate the property or do anything to increase the value of the property and you're stuck with it, right? Because what will happen is you now have a property that you bought, but you're pretty leveraged and you don't have enough money to renovate, right? And you don't want to be in a situation like that because you may be in a market where it's maybe a buyer's market rather than a seller's market. So now that property, you might have an issue selling it, right? You do not want to be in a situation like that. So hopefully this video was a little bit more insightful. And always remember, you always have to review the numbers and make sure the deal makes sense. If you like this video, please like, share, and subscribe. I'll make others very similar in the future.